What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are following up with the LEAPS options video yesterday with cheaper options, but now we're bumping it up to the next level. So if you're excited for today's video, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. Again, like 80% of you aren't subscribed to the channel, but you're watching the videos, so feel free to click the subscribe button, or if you don't like what I do, feel free to let me know what I can do better, as always, as I said in last videos, and we'll get right into it here. So the last video we covered was 5 cheap stocks to do LEAP options with. This one, we're doing the same thing. We're bumping it up to more of an expensive route compared to the other LEAP options here. We only have 4 tickers here that you see on my symbol. It's Mobileye, Zeta Global, C3AI, and Black Sky Technology. So we're going to show you the charts, and we'll talk about how the LEAP option idea works here. But again, as a reminder, I am not a financial advisor. None of this is financial advice. This is based off of what I'm looking at here personally. Make sure you do your own research before doing any sort of investing. And these options here are probably going to cost you about $1,000, maybe a little bit more than $1,000. The other ones were about $500. These ones were bumping it up to another level of, if I had $1,000, what kind of LEAP options would you look at buying here potentially? So the first one we have is Mobileye here. Now Mobileye, as you will see, has had a recent pullback on the daily chart here. And again, take a look. I do always do these Fibonacci levels to kind of get an idea as to where we are at. So again, a little bit of a pullback here. And these levels, actually, it's simple to draw, but it's very, very, very effective, because taking a look and seeing, you can see there's a lot of consolidation between these two ones right here. It broke down right here. It went right into that golden zone that we had from before and it retested. It kind of traded here. Then earnings, it seems like, came out and just plummeted the stock price for whatever reason. But what I've started to notice with Mobileye is that you have this is the low point, and then you have a higher low, and now you have another higher low with another pivot potentially up to this level. The big thing that I'm seeing is this level right here at 19.36. This would be your next level of resistance that you're looking at climbing. So if you were looking at buying a LEAP option, you want to hopefully have a break even around this $19 mark here. So that way, if it rejects 19.30 and you see the rejection happen, you can close the position out and then either have a small loss or a break even potentially. That's kind of what my logic would be behind these kind of LEAP options here. But if it breaks through 19.36 and we go back into this golden zone, your next stop is about 24.85. And taking a look at the options chain here, again, these LEAP options are for way out of the way out, right? So we're not looking at, like, 3 months. We're looking at like 7 months maybe. You can go to June of next year, which is almost a whole year out here. And what we're looking at for a position here would be, somewhere around like the $600, maybe $800 range. You can go even crazier if you want to. If you want to go to June, but I'll go to January of next year, or 2027. Looking at, almost 2 years out here potentially. But what you can do here is you can even get, a $10 strike price here with the mid ask is $5.92, so your break even be $15.92 here. And again, if you are worried about the loss you might get with it, in terms of if it doesn't run up enough, you could go a little more deeper in the money. The problem with deeper in the money, obviously, is that you're paying more for it, so there's more loss to have in case it goes against you, right? But if you wanted to buy a LEAP option for, say, January of 2027, and you like mobile AI, again, I like how the chart's looking right now. Again, our next level of resistance is 19.36. So if I can get, even the $8 strike price here, and get filled at like $6.80. Again, that allows me to have a break even about $14.80, which is already not even close to that $19 strike that we were talking about from earlier here. If you really wanted to go to $1,000 one, which you definitely could, you could do the $3 strike price, which is like the most in the money you can possibly go in this case. And this would put you at, $1,000 here to put in, but your break even be $13.80. You'd already basically be in the money in that case. As long as Mobileye doesn't, reverse course and go back down between now and January of 2027, then you'd be all set and good to go. You can even do the $5 one, about $1,000. So a little bit more of expensive options here, but honestly, I mean, this is to me, is looking at, you have that consolidation period. And again, these LEAP options are for going way, way, way far out here. So Mobileye is one of the cheaper ones that we're looking at for options here. So yes, it's not quite $1,000. You don't have to spend $1,000 here. But, you can go, far out, $5 strike price, cost you $900. Break evens at, 14.20. It has moved 30 cents. And it's actually already at 14.13, as we know. So, that's something to kind of take a look at as a result of, one possible option. The next one we have is Zeta Corp. And Zeta Corp, I've liked this one as well from the recent retracement levels that we had here. As you could see here on the daily chart, we did a little bit of a retracement back down here after their earnings came out. And then I went down to the 4-hour time frame here. And this is a big, thing to take a look at here on the 4-hour. Is that it rejected this line right here. It tried to support right here. It didn't work out that well. It had a rejection here. It broke through and came back up right here as well. Resistance. So this first pink line, the 1882, or what is it? That's not the 18. That's what the price is at right now. The 1865 line right now is kind of like a major level of support or resistance, depending on what happens. And what we'll notice is that right now, at the time of recording this, it's right above that 1865 level. So what does that mean? Well, if it does, in fact, say keep this as a support level for long term, next stop is 20.52, which is 20.52, which is where it rejected last time here. And I think it had a rejection point earlier. Well, it was support right here. It tried to, consolidate here. It didn't work out. It became support here. Now it's resistance. It was support level. So this next line, more support, as you can see. And again, the more and more you go back into these levels, the more and more you can see kind of how much the stock actually moves with it. So what we're looking at here is that the hope would be that this 1865 becomes support. So far, it's kind of climbing up above it, which is great. You want it to, if it retests it again and it stays above it, then that's a great support level to go. Next one is 20.52. And if it breaks through that level, the next one is up at 23.20 will be my next level of resistance here based off the fib levels. So if you take a look at the options chain here, again, going way far out here potentially, as you'll see, these options get pretty expensive the farther out you go because there's more time for the stock to move in your favor. So my first level of, resistance is 20.52. So my logic would be, okay, what can I set my break even at 20.52 to be? Well, if you take a look at, even a $10 strike price here with a mid ask of, $10.15, which is $1,000 here. So you're looking at a break even of 20.15 right here. And that would put me right below this one right here as a result. So if it comes up and retests this level, great. We're going to be able to basically hopefully break even on our position here. But if it gets this level here and it breaks through it, you're going to be looking at a lot more profit to $23. Then the next one is 26 if it keeps going and going and going as the company does better and better, hopefully. So, another way to look at an option here, again, going, way, way far out, you do a $10 strike price here. That would get you a break even of $20.15. You could do the $12.50 if you want to. That'll give you a break even of, $21. So a little bit, getting close to that level here. And again, the thing you need to keep in mind about with LEAP options, again, if you buy deep in the money ones here, is there is risk of loss. Okay, so don't get me wrong. So make sure that you do, in fact, have your stop losses set up so you know what to do. Because again, if it retraces back down to $16 and it breaks this one, this would be probably where I would set my stop loss at, around $16.77, because next free fall is $14. Then it has to somehow recover to it. And that's going to make you lose a lot of value in that option over time. The good thing is with LEAP options is obviously that there's time on your side. So another one you take a look at, about $1,000 or so. $10 strike price is about $1,000 or so. Even the $12.50, about $800 or so. But it gives you almost 2 years for this stock to basically push past $20 per share. As you watch more and more earnings come out, you can get more of an indication as to bullish versus bearish on the market as to what this company's doing here. But again, a very, very good way to look at it. And again, the recent high was $26. And taking a look at the daily chart, it went as high as $38. So imagine you bought in here and it retests those all-time highs of $38. You're making a lot of money on that option play just in and of itself. So this is something to keep in mind about for LEAP options as we go. The next one is C3AI. It's C3AI got a lot of problems from their earnings, right? It dropped like 20-something%, maybe it was close to 30%, I think it was at one point, and it dropped significantly as a result. But what I'm looking at here is now, again, this is one of those rebound plays. They're an AI tech company, right? And that's where we're going and we're moving forward in the future here. So they're an AI-based play that we're looking at here. And again, one as high as, $45 or so is the all-time high we're looking at right here. And if I want to go down to the 4-hour one, it looks like this was the worst of it so far, unless some other crazy news breaks out here. But a lot of the volume seems to have consolidated around here. So maybe we're on our next leg back up. And our first level of resistance that I have mapped out here is 21.87. You can see it kind of plays around that level pretty nicely here. Even going back to the pre-fib level I drew out here, again, it was resistance here. It was a support here at one point. Some support here broke through. Like you could see kind of how this line is a very important line, looks like, and there's a lot of volume probably as a pivot point for C3 AI. So what we're looking at now is, it's a rebound play here after earnings kind of comes down. And the first level of, the first take profit, or the first level you look at is 21.87. Again, my logic would be to have the leap option, basically have the break even be around this level right here, because if it rejects this level, you can close out with a little bit of a loss. If it breaks through this level, you're making some good profits and everything else is money after that moving forward. You're not looking for a huge move in the stock in the direction. So what we're looking at here is, say you want to go, January. You could go to December if you really want to, but that's it's actually not that it's actually not that expensive for December. You're looking at over 2 years if you really wanted to. And again, obviously, leap options can be anywhere from, 8 months to 2 years, depending on how you feel about the company and how much you care about the stock. The thing to remember also is that your money's locked away, all right, because you bought into it, so that money isn't making money somewhere else. So there is opportunity cost with buying leap options, just like buying any other kind of options or stocks that you look at. But, we can go to, say the January, 2027 strikes here. And again, there's a lot of open interest. So as you'll see, there's a lot of people that are interested in buying these kind of stocks and these kind of prices here. And you can see there's actually a lot of people that are looking at buying it and hoping that's going to go up to like the $30 mark or something like that. So again, we're looking at 21.87 here as a break even here. Even if you bought the $10 strike price here, that's going to cost you, $900, $875, $900 here. That puts you at a break even of about $19 per share. So that actually puts you down here in like the $19 mark or so, like right around here, which is where there was some little bit of, some level of support here. Then it just kind of just said, nope. But anything after $19 is profit. And if people are banking, let's say there's a lot of money that people are banking on having it go into the $20 to the $30 range here, potentially, like if it goes to the $20, $30 range here, like you're golden, like you're making some good money here. Yes, you are paying more premium upfront. That is 100% correct. But the difference between you buying over here versus buying over here is that your decay is a lot less. Well, not a lot less, but that's actually not true. What it is though is that you're paying more for it, but the probability of profit is a lot better because it doesn't have to move as much. Again, you buy a $10 strike here for $8.75, your break even is $18.75. If you buy, say, the $25 strike here for $3.05, then your break even is $28.05, which means you look at the stock to come all the way up here. Your break even would be down here. Theirs is like way up here. So, and anything after your break even is obviously profitable for you long term. So if you don't mind locking up some cash for, the next, 500 days, you could definitely buy it for $1,000 here. And the thing to remember also with leap options is you can close them early. Say earnings for C3 AI comes out next quarter and it drops a huge profit boost and the guidance and everything else in between, and this thing skyrockets to $25, $26 per share, you can close out your leap option quick and make some good money on it. You don't have to hold till expiration. So things to keep in mind about with options, you do not have to hold it till expiration. So C3 AI could be a really good rebound play potential. First stop, 21.87. Next top is $26, which would be an unbelievable, return on an option that's deep in the money that you buy for $1,000 or so. So again, another $1,000 option play you can look at here potentially. Again, if you have a bigger portfolio, $1,000 might not be as much as you think. And again, the nice thing to keep in mind about is that it's giving you access to 100 shares of this company without buying 100 shares. 100 shares here would cost you $1,700. And then, your 100 shares here would cost you $875. So it's half the price of the 100 shares, but still gives you the access to those 100 shares overall. Last one that I have is Black Sky Technology. So Black Sky Technology has had a little bit of a pullback from their recent highs. I don't know if these are all-time highs or not. I'm going to guess they are 28.85 here. But, it's kind of had a little bit of a pullback, which is usually what happens. When you have a big run-up like this, you're destined to get a pullback here. But in taking a look at the 4-hour here, again, because I did the Fibonacci levels from the day chart, you can see how it kind of follows these good levels here. And it looks like these two, this region, this rectangle over these purple lines here is a good either resistance level. And if you trace it back even a little bit more, again, resistance, support. So going back even further allows me to see kind of where levels are at. I don't know if it has anything else from besides that. No. But, you can see that it has some decent good support and resistance levels here. So what we're looking at for Black Sky Technologies here potentially would be to go from $17 or so all the way up to $19. Then the next stop back up to that golden zone would be about $21 here. So a leap option for this one, January of 2027, about $1,000 or so. You buy a $10 strike price, for example, for $9.45. You're looking at basically a $2 move between now and January of 2027. So this would be about $1,000 play right here, potentially. A little bit of interest here, which is really good to see that people have the same kind of logic and mindset as other traders do. Again, these are the ones that are a little bit more risk because there's not as much, the break evens are higher, but they cost a little bit less, as we know. But a $10 strike price, for $9.45, about $1,000 or so here, gives you a break even of $19.45. And, that's going to put us basically pretty close to this first level here of break even. And if it goes past that, we're going back to that golden zone here, which looks like there's a lot more resistance up here. If it retraces back up in this case here, you're looking at $21, you're going to be in some decent profit overall already. And then again, if it goes back to all-time highs, oh baby, forget about it. And the thing to remember, you have almost 2 years on this trade. Okay, it's not like a fridge. It has to happen in like a week. This thing, you could just set it and forget it, come back in like a couple months, see what it's doing. And if it takes, and the profit's profit, then take it. Why not? So that's another option you can take a look at for $1,000 based off the charting that I see as to what I like. Again, I'm looking for those stocks that have those nice rallies up, but then get a little bit of a pullback before the next leg up. Because if you're buying stocks that are really, really high up right now, it could be more risk. It might work out still, but there is more risk associated because you're going to get that pullback at some point. Stocks don't only go up. So looking at these kind of companies here, what you'll see is, Black Sky pulled back a little bit. C3I had a huge pullback. Zeta Corporation, Zeta Global Holdings had that pullback. It's kind of had a nice rally back up here. So this might be a little bit more of a riskier play per se, but their earnings were phenomenal. So you might get that momentum play moving up. And Mobile AI, again, same thing, has pulled back down from their all-time high of about like $40, I think it was. Yeah, like $48 or so here. So looking for those pullback companies are definitely the ways to look at if you want to go long on options here, and it definitely helps you out and getting your position in and then kind of going from there. So thank you guys so much for watching today's video. Again, if you made this far in the video, make sure that you like the video, subscribe to the channel, and turn on those bell notifications for all future uploads. Again, these are about $1,000 per so option trades you can look at here that are leap options that I think could be relatively profitable long term. But again, not financial advice. Please do your own research as per usual. This is information and educational only. Thank you guys so much for watching. I hope you're making money in the market through some way, shape, or form. And as always, I will see you in the next video.